Hello, once again, my name is Pedro. I have a video on Fibonacci. Today's lesson is really on Fibonacci. All right, let's go straight to chat. We don't waste much time here. So we uh, we learn something serious. It's been a while. I give you lessons on Fibonacci. Oh no, I give you lessons, right? So Fibonacci, right? This is Fibonacci under ICT, right? It entails coordinates in which ICT strategy, okay, takes reference from. All right, so this one, the one at my left, okay, the one on the left side is for bullishness, okay, is for bullishness, and the one at the right side is for bearishness. Okay, so now let me explain. I wouldn't go into the history and stuff, right? I think it's waste of time. It's not really going to give us much to get it. So let me just talk about the technicalities about Fibonacci. All right, Fibonacci helps us to identify the swing highs and lows, or the areas which are ideal for uh, swing highs, right? Right, for ideal for swing highs and swing lows, or areas that are ideal for price to turn around, right? So to start with, I'm going to talk about market swing highs and swing lows, right? So I'm gonna delete the Fibonacci's for now, okay? So that we go deep into something. Right now, we all know from beginning, okay, that price always give us swing high and swing low stuff. You understand? Okay, swing high, swing low stuff. So what we are talking about today is how to know the area in which you are. Okay, Fibonacci was the same as other blocks. Fibonacci have the same, property or principles as other blocks, right? Ideal areas that are safe to enter your trade. That is Fibonacci, right? And you bring in Fibonacci when you could realize the price has shot to a certain level and price is coming back to a retracement. It is during the retracement level that you find Fibonacci. Okay, and Fibonacci, the levels in Fibonacci doesn't mean you should just enter a trade when you see that level. Okay, the level there is for you to find something that really works for you, right? Before I continue, I need to draw another block, right? So you can take reference from that. All right. So for bullishness, okay, let me just get it right quickly, right? So okay, right. So Fibonacci and my other block, they all work in the same principle. They work with the same principle, right? Okay, so price turning around from somewhere here. Okay, so second low high. Is that it? Okay. Trying to get my other block set for this particular lesson. Okay, so great. All right, great. So now this is a scenario where price is turning around from sell. This means that price was coming from the upside, dropping down and then turning around here, right? Turning around here and trying to do what? Go back up. Okay, so this is other block, and with other block, sorry, we mentioned that other block are the area that price bounces off, right? Because those areas are rejection zones. So the other block here becomes your swing high, and now this becomes your breaker. This bullish candle becomes your breaker. price. Turning around here tells you that price has respected the swing high over here, right? That is a change in market structure. The price closes in this level. The next movement, you enter your buy, right? And your stop loss comes to this level, and then price goes to the upside as you anticipate. Great. Now, what role does Fibonacci play in this level or in this particular kind of setup? Now, let me bring it in. Let me put Fibonacci other block aside. Now we come back to Fibonacci later. Come back to other blocks later. So now Fibonacci, we all know that price travels in a swing high and a swing low level. Okay. Now in the swing high and swing low levels, price comes to a rest when it goes to a certain level. Let's assume we are in a bullish trend as we are right now. We have to observe prices movement and observe prices resting point where price comes down to rest, right? That is where it comes down to a certain level. So now to bring in our Fibonacci, we need to know how to access the Fibonacci. Most of the tools you get it here, right? Your empty form, you get it just for your toolbar. If you don't find it there, then you have to go into insert, and you can see Fibonacci, and have all the types. You have the expansion, and you have the retracement. And normally the retracement that's been used so far in ICT, we hardly use it because Fibonacci works the same as other block, right? But there are certain people who need help with this from the beginning. So with Fibonacci, as time goes on as an ICT trader, right, you start leaving it and putting it aside because they work the same. Okay, they work the same. Great. So coming in again with my Fibonacci, this is how it looks. If you need Fibonacci for the upside, right, these are the parts of Fibonacci, or should I say the coordinates. Now to be able to identify the coordinates, okay, where these lines, the lines, okay, are being drawn. Okay, they are all mathematical calculations prepared by someone somewhere. Long story. Okay. Now to give you the coordinates, right? I'm going to right click and go to properties. If you get a chance, okay, you can take a paper and then you edit the coordinates as you can see right now, right, from 0, okay, to 0.5, then we come to 0.62, then we come to 1.0, we come to 0.7, 0.705, we come to 1.0, we come to 0.79, we come to negative 0.27, we come to negative 1, we come to negative 0.62, and their descriptions are also written at the right side. Okay, you can try your best to pause, skip, or replay these areas or loop this area to be able to get the coordinates right. And afterwards, you can proceed with the video. If you don't have much, much space to put in your coordinates, you have to add coordinates. Right, to click on add. If you have it already, you just come here, double click on it, you can change the figure, click outside it, it's changed. You come to description, double click, you edit, click outside it, it saves. Then you come to okay. If you want to delete, you can see it, you highlight, you delete. If you want to add them, you just come to add. Right, you click on add, it comes to put your coordinate, you out, you get it. So you can spend time on this one and put in all the coordinates. Now for the color and stuff, I think you can see it here. Right, that's the color for the bars, the color for the whole thing. You can edit it out to how you want it. Okay, to how you want it. Now we have this red is for the bar. Okay, this bar. So yeah, you can modify it to how you want it, right? So that is how Fibonacci is being set. Okay, so now we're coming into how to complete Fibonacci. how to properly use Fibonacci. Fibonacci have been set to certain areas to target in price. Right. If you could see that we have profit scaling. Okay. We have equilibrium. We have the OTE, and OTE stands for optimum trade entry. Optimum trade entry, being directed by our mentor, Michael from ICT. Right. So I think this is 100. Let me edit this quickly. Instead of levels. Okay, 0.0. Alright, that's fine. That's fine. So now alright. 1 second. Alright, so I have to draw my my chart again. Okay, so price traveled from the high to a low, to a high, to a low, to a high, to a low, to a high. Right. The work of Fibonacci is to help you identify the ideal areas to, be in a trade when price is turning around. Now this is Fibonacci. Fibonacci is being drawn. If you want to draw Fibonacci, then let's assume. Okay, let me draw another chart right now, and then I can come back with Fibonacci. Price has started traveling to a certain level, right? You missed it. You couldn't start. All you need to do is to wait for price to come down with the same concept as other block. Price coming to a level where the last bearish candle was. Okay, and that level becomes a stronghold for you. If you haven't watched my other block, my lesson on other block, I think you can do that now so that you can come back to this lesson again. Because I'm not going to go so deep into other block right now. Right. So let's say this is our other block. Okay. This is our other block. The last bearish candle when price started buying. So this is our other block. So this tells you that this level when price has gotten to, this is our other block. Okay. The last bearish candle is the other block. That means price should not break the low of the last week low, which is this area. Okay. So if I put in maybe a bullish candle like this, okay, and maybe have a bearish here, okay, because you don't get bullishness all the time. Okay, so maybe something like this, and price push starts going up. Alright, there are going to be instances that price is going to do whatever you want to do. All you need to do is to just relax and observe price. Okay, so price will be doing whatever it's trying to do. Okay, and let's assume we have something deep like this. Okay, sometimes let me just add a wick. Okay, something like this. Right, this is a certain time frame. Right, this is a certain time frame, and this last bearish candle for this upside. Now, where does Fibonacci come in? Fibonacci comes in when price starts dropping. Alright, giving you a swing high. Giving you a swing high, and you have your swing low. Okay, because definitely price was coming from somewhere. Okay, let me just fix this thing right now. The price was coming from somewhere. I believe you understand now. So at this point, you bring in your Fibonacci, just confirm that your order block is, where price has gotten to is an ideal place, especially if you're not so good with order blocks. So now let me take out some of the noise, take out this, take out this, take out this, take out this. Good. Now let's see. Now I bring in my Fibonacci, and then I put it from the lower, this low, to this high, right? Now this high. It is believed, or out of the Fibonacci indication calculation, that price the price always rests or returns at from or within the range of 62 level OTE and then the 79 level OTE. Within these areas, price normally turns around. So if you have your Fibonacci drawn, okay, and then you realize that price has traveled to these levels, any of these levels, okay, that is where you place your trade to the upside. That is where you place your trade to the upside. And now you don't just place a trade to the upside, you need to look for liquidity. Now when you place your trade, you have your target levels which are already been placed. You know, the price normally takes out highs when it is in a bullish trend, and when it takes out highs, you normally go on certain pips, sometimes 10 to 20 pips, sometimes 50 pips. So your first target is taking out a high. That is price making their profit before extending liquidity to the upside. Okay, so normally you enter maybe 2 trades or maybe one huge lot, maybe 0.02. You take 0.01 profit, allow the rest of the 0.01 floating trade to get to the second target. Then we have the symmetrical or symmetric price level, which is this level. Okay, this tells you that the distance, okay, the distance from here to here is the same as the distance from here to here. That is symmetric price level. So price would like to double its investment or its profits. Okay, the investors, that is what they do. Understand? So yeah, not to bring in so much confusion, I'm gonna go back to explain certain things again. Now, when price gets to these levels, the the 79 level, the OTE, which is also 75 and something level, okay, the coordinates are there, but this is how we put it. This is how we label our order blocks, or sorry, label our Fibonacci for proper analysis, okay, or proper understanding. Right now, as I said, you don't just enter a trade when you see price getting to Fibonacci level or this order block level. Okay, you need order block. You need to see order block in a smaller time frame. So assuming this is 4-hour chart, okay, if this is 4-hour chart, you need to see a breaker in a smaller time frame, maybe 15 minutes, right? Mostly should be 15 minutes, 50 minutes, 1 hour, 30 minutes. You find these setups, right? Take advantage over it. So I'm going to get my order block, and I'm going to show you why I'm getting my order block, right? So order block for bullishness means I'm going to have a bearish, bullish, sorry, alright, so bullish, okay, this push has become my breaker, right, and I need price to come to the low side, the bearish, okay, so I get this, and then maybe I get this, okay, because price is coming from somewhere. Okay. I hope this thing works. You know, this thing really makes sense to all of you. Right. So now this is my order block. Okay. The high has been taken out from here. So I know that when price breaks here and price retraces here and hits this bullish move, I buy from here. I put my stop loss here. Right. Great. Please focus on this one. It's very, very important. Just pay attention. You have to, if you like, play this video over and over again. Alright, so now this is my order block in 15 minutes. right, in 15 minutes or 1 hour or 1 hour or maybe 30 minutes whatsoever. Okay, this order block is going to be found here in 15 minutes. Okay, so let me make it look small because this is a smaller time frame slow. Okay, if you find this order block play out here, then it means that price is about to turn around. Okay, because you don't get this order block play itself in 4 hours just here. You only see maybe a new candle opens. Okay, so a new candle opens here and then it just shoots up and you miss the entry, right? You only see wicks or something over here. That's why you need a smaller time frame to confirm your push. So if you find this order block thing in 15 minutes on your OTE levels, okay, optimum trade entry levels from 62 to 79, the ideal and the most promising one is the 79% OTE level, right? But mostly it is sitting on the order block, the large bearish candle, right? Mostly does that. It sits on the open of the last bearish candle for price going bullish. So when this happens, you enter your buy. In fact, your buy is going to be somewhere here, and your stop loss is going to be on the low of the order block. On the low of the order block. Okay, I've brought out something so critical, something so secret, right? Something so valuable. You're paying nothing for it. So take advantage of it. This is all. Now start looking at your profit scaling. Some would like to just take out the high on the profit scaling. Some would like to take the first target, right? Some would like to take the second target. Now, before you can confirm or agree on these targets, okay, before you can agree on this target, you have to look at the left side. You have to look at the left hand side, especially after taking out this high, right? Before taking this target one, you have to look at your left hand side. That is there any liquidity, right? I spoke of liquidity. You can check on my other video to understand. Is there any liquidity at your left hand side? Is there any before highs at your left hand side? Is there any pattern, any gaps whatsoever at your left hand side? The same applies to the target too. You check, is there any liquidity at your left hand side? Same happens to it applies to all of them, right? Because these targets are not always, or they are not 100% met at the end of the day, or at the long run. Maybe all the targets are not being met. So what we advise is that you pay yourself first. Maybe you enter 2 trades, you reward yourself on one, maybe the first more high or the first target one. You leave the second trade to float. Okay, so you have to learn not to be greedy. You leave the second one to float, targeting that the target 2 or the symmetrical triangle. Then you place your stop loss right above your entry. Maybe if this is your entry, if this is your entry, the stop loss could be in these levels and you'll be safe. Place your stop losses at good vantage points that when price returns, price fails, okay, to go on the upside. Okay, maybe after taking your profit. After taking your profit, there's the second trade, price will not go and you targeted this level, right? Price gets here and then price returns, right? We don't know what happened. By then you might not be close to the chart or something. And price returns. It's going to take you out, but in a profit. Okay? The distance from here to here will be your profit. Right? You don't have to get greedy. You need to be content with what price gives you or the chance the market gives you. Don't be so frustrated or greedy or mad because you missed the whole of this profit. Right? It happens. It is happening to most of us as traders. You have to get used to it. You need to know when to be out and when to be in. So Fibonacci is more solid when it comes combine order blocks, okay, to the whole push. And when you start doing that, you will realize that your trading experience has increased, and then your emotions will reduce. One advantage about this whole concept, order block and Fibonacci, is your entries are safer than certain form of strategies. Okay, so with this, somebody might have entered a trade. Maybe you might have started buying from here. Okay, buying from here, expecting price to go up, and price will coming all the way down to this level, might spook the person, and the person might close her trade or his or her trade. Secondly, the person might have entered a huge loss, okay, that is a lot of money. Because, and thirdly, the person entering the trade here will definitely place stop loss at the low, right? Placing a stop loss at the low here. Now you could see that the distance from this area to the low is quite huge, right? And you could lose a huge amount of money at this level. So what you have to do is to get a good entry level, which you don't lose much. So at least from here or from here, price coming to this low is far better than here. At least if you're losing 20 pips from here could be 5 pips or something, 25 pips, and that 5 pips could have saved you, right? Could have saved you on something. So yeah, in ICT, in Forex, you need to be very, very calculated or sensitive when it comes to money management. It's very important, very, very important. And being very, very selective when it comes to entering the trade. So Fibonacci, this is all Fibonacci. It's Fibonacci, right? And I bring Fibonacci to this side as well. You see that when I draw it from the low to the highest point at the moment, price came to these levels, the OTE levels, the 62, the 79. When you get the order block, as I said, you get this order block, show itself in a smaller time frame, 15 minutes, 30 minutes, 1 hour, and assuming this is a 4-hour chart, then you can place your buy, as I've said, place your buy to the upside. Okay, place your buy to the upside. Stop loss at the lowest point, the previous low, and you go. The price hits your targets, as I said. You see, price was Fibonacci. Our setup is to give a target to the symmetrical level, but here lies the case. This is what it did. So you could be out, you wait for price. Now, whilst you're waiting for price, you just come take your Fibonacci. Okay, you can just place it on the new swing low, you drag it to your swing high, and price came to where the OTE, 62% OTE. Yeah, so it will never be 100% that only 79% is where price gets to. No, just look for your order block. In those levels, look for order block. Okay, look for order block. Go back and watch my order block, my tutorials on order block, and come back here. Because order block is the overall view or reference to whatever price is trying to do. And order block is the same as divergence. Order block is divergence in another way, in other terms. Order block is divergence. Right, so yeah, price is doing this, and then we come to the next swing, come to the low, we come to the high. Now we are at equilibrium. Equilibrium is also another level that price respects, but we don't trust equilibrium because sometimes equilibrium, right, that is price coming to a 50% push to the lower side and then goes back up. When you see price on equilibrium, there's going to be a lot of question marks. Just stay away. That is what I was saying, stay away. Because sometimes you could do this and you could start seeing something like this, and then this, and you end up coming down by you not seeing it. Most of divergence starts playing out, okay? In a bigger time frame, divergence start playing out from equilibrium. So you should be mindful of these stuff, right? You should be mindful of these things. So this is what I have for Fibonacci, right? For the bearish side, okay. Let me see what I can do for bearishness. Okay. All right. So from the bearish side, price is taking out a low. What do? Just delete this so that you don't get confused. You take your Fibonacci. Now you take the drawing. Okay, you draw the Fibonacci by taking from the highest point to the lowest point. For bullishness, you took it from the lowest point to the highest point. You understand? But now that price has not again. So now for the bearishness, sorry for that. Price, go and watch divergence, go and watch my other blogs, go and watch my trend and stuff. Okay, because here the reason I'm putting this here because I found something which was a pattern. Okay, head and shoulder. Also, I found price giving me more lows, telling the price going to drop. Alright, and I know that being given this means I've realized that price is taking out the low. Right. So if that is the case, I'm going to continue. That we're going to look for bearish order block at these levels, and when I find it, I know price is coming lower, right? So price returns to a certain level. Okay, then now I take my Fibonacci, carry it to the next highest lower high, okay, then bring it to the next lower low, and at this level, price gives me order block again, or gives me Fibonacci retracement, order block in a smaller time frame, 15 minutes, right? 15 minutes, 30 minutes, 1 hour, because we are assuming this is 4-hour chart, right? So we target either the lowest point, the low, or we add in a little dip. And as I said, if this is what's happening, okay, or assuming thinking this target will be met, okay, this target will be met, you have to look at the left hand side. Is there any liquidity on this push that price left? Go back and look for my liquidity videos and watch. Okay, you check if there is any liquidity on the left hand side. That will confirm that these targets can really be met. Understand this? These targets will be met before. If not, just target the previous low and price comes there, right? So the same concept, right? It's the same concept. So price maybe returns somewhere here, right? Then take my other Fibonacci from the high to the low, and price maybe if I find a setup. It's all about finding the setup, okay, the breaker and stuff. And you definitely know that these areas of price is getting to are mostly on the other block areas of price. The last bullish candle that made price to sell. Okay, so these are the kind of ways of being profitable with Fibonacci and order block, combining Fibonacci and order block. Right, now there's one secret you should know about order blocks and the Fibonacci, blah blah blah. Just using Fibonacci, you find your breaker. I've added one thing right now. Okay, so assuming price is on the sell, I just like the sell trades that buys, right? Assuming price is on the sell, and we have this, we have this, okay, and then we have Yeah, something like this, a sheet up like that. Okay, now this is what I'm trying to do. Now a high has been taken out. Okay. Now if you go back to the beginning of my videos, like all my videos on my channel, right? I have a video on candlesticks, bullish and bearish candlesticks, telling you how swing highs are made with candlesticks, right? The comparison of bullish and bearish candles. Okay, so this is a swing high. Price has taken out, becomes a breaker. Now with your breaker, we expect price to come down to respect a certain level. We expect price to retrace, okay, to other block level, which is this level, okay, before going back up. Now, with the same issue, you can use your Fibonacci to do the same calculation. Okay, when you place your Fibonacci from the lowest point to the highest point after price has closed, and you've realized. Now, let me take out Fibonacci now before I confuse anybody. All I'm trying to say is that you should start seeing price beginning to sell after the shoot, trying to retrace, coming to test the other block. Okay, when you realize price is trying to do this, then now you can put in your Fibonacci, right? So you come to Fibonacci, carry your from the low to the highest point, and this is your Fibonacci. Now you could see that your Fibonacci, okay, your retracement level there, 62% OTE, the entries are on your other blocks. Areas where you should be looking for price going up are on your other block. Okay, are on your other block. This bearish candle, they are all on it. It tells you that when price gets to that level, in the same time frame, you don't need to go into another time frame. Assuming this is a 15 minutes. Okay, this is you're looking for a break. You're looking for your entry. Okay, you look for price giving you that shoot. Okay, let's say price came all the way to this level. You still need to just wait for a bullish candle to appear. Okay, if you get this bullish candle appearing, then you can be part of this trade. You can just be part of this trade over here, and your stop loss down here. And now you can start targeting the highs. Okay, there's profit scaling, the target 1 and target 2. Alright, this is for only as one time frame is what I look. Okay, this is for 15 minutes. If you want to find your entry, it's the same thing. Right? The other block respects Fibonacci, and Fibonacci respects the other block. So if you have these two co-influencing, right, your setup or your target or your entry is solid. But here lies the case, no strategy is 100%. That is one fact. So no matter how good you see a strategy, no matter how good you tested a strategy, you only need money management to get it right. So this, I'll say I'm okay giving you this lesson on another blog, and you can play it over and over again. I'll come back again on the next video to give you more in-depth lessons of other blog coming into on the Fibonacci plus other blocks with reference to higher time frame to lower time frame swings, right? I've already spoken about it, but I'll go deeper a bit. But this is enough for you to try your hands with something on the chart, right? But I think I have to go into a live chat, and let's make some one analysis on it, and then we proceed. Alright, so I'm looking for something. Okay, now look at this. Alright, so I'm going to take this swing high. Okay, you see this is a swing high. Right, this area is a swing high. This is gold. Right, this is gold. This is a swing high. Price has taken it out. Okay. Now price started selling from here. At this point, this is where you bring in Fibonacci to see what's really transpiring over there, right? So take this out. Let me bring in the Fibonacci. So Fibonacci from the lowest point to the highest point, and yes, so you could see price came to try the OTE level and the 62 level. Okay, so now what's the next thing? You are going to just identify that zone. All right, so this becomes an important level for you. Okay, now at that point, I'm going to just mark everything with a vertical line. The vertical, yeah, I think so. Now I'm going to take out this Fibonacci because it has fulfilled its purpose, right? So I'm just going to mark the low and the high of this particular area. That is this area. Sorry. That is this high and then this low. Right. So let me zoom in a little bit. See over here. You see, you have to spend time with the chart to be able to identify which one is a trend, right? Which one is a swing high, which one is a swing low. Right. From here to here is a swing high, right? So this becomes a rejection point, right? A swing high. So what is that? Now price has broken it with this push. Okay. Now there's no sign of price coming down. There's no sign. It has broken it, and the sell, the bearish candle, was a retracement on this swing high. Okay. So what is it? You are looking at the fact that this becomes an order block, right? This becomes an order block. This becomes your breaker. Now, the order block's high has been taken out. So this is the area that now that this candlestick has closed bullish, this becomes your buy signal. Your stop loss is this low. Okay, the stop loss becomes this low because you are respecting Fibonacci. You are respecting order block. You've combined the two strategies together. Now, as I said, when you're about to enter a buy, you now start to look at the fact that what should possibly give price the push up, and you have certain things around you. Look at the left side, and you should well understand why price should go up. I don't want to go deep. I end up analyzing a chart. I don't want it to happen like that. So I'm gonna go back into a certain time frame that price has already played out. I don't want to give anybody a signal or any current chart or something. Get it? I just want you to have that in mind. Now, if you're looking at this right now, okay, price giving you a swing low, price giving you a swing high. Okay, at this point in the price, you should be taking this for bearishness. Okay, Fibonacci from the high, sorry, to the low, because price has been bearish. Price has been taken out what lows. Okay, swing low. Okay, swing high, not swing low. So price is taken out what lows. Price came here. Price came to what? The OT, the 79% OT. Right now, as I said, people will be targeting the low because from here, God price is taking out lows. How will you know if price is not taking out lows? You don't know. That's why you should enter trade maybe 2 trades. Okay, you target certain levels in price, you leave the other one. So by now someone might have taken profits, okay, and left one trade hanging. Okay, so if price returned against him or her, right, the person is out. Okay, so now OTE level. And at this area, okay, at this area, you're going to look for change in market structure in a smaller time frame. So So if it happens in the same time frame, that's great. Other block happening here, all right? But I don't want to talk about that right now. So when you go into a smaller time frame, like 4 hour for that same area, for that same area, 4 hour. Okay, this is the area that this happened. Okay, so here, look for your cells here. Your stop loss is going to be, sorry, 1 second. Okay, I'm trying to, okay. So when you enter your cell here, mark it with a different color. Okay. So when you enter your cell here, you come into daily, okay, where you found this setup, the Fibonacci setup, then it means your stop loss is going to be here, right? Your stop loss is going to be here. It's going to be your stop loss. Yeah, don't mind my trade. This is a demo. Yeah, as I said, you leave one floating. So if price doesn't get to that level, you just you're cool. You don't have to, fight the market. You don't have to change your trade. You don't have to change your losses. Just be content with the little you get on the chart. As time goes, when your account becomes bigger, when your account grows, that's when you can grow. It's the same concept. Don't be greedy. You'll be okay. Alright, so this is it for Fibonacci. Yeah, you need to spend much time with the chart and you'll be okay. No setup is 100%. Thank you so much for your time, and I hope this really helps. Don't forget to like, share, subscribe. Thank you so much. All the best.